السلام عليكم ورحمة الله وبركاته.
Walaikum assalam, Sheikh. How are you?
Alhamdulillah, Alhamdulillah. How are you, Brother Omar?
Alhamdulillah, Alhamdulillah. Everything is good, sir. Good to see you, and inshallah, looking forward to see you
Alhamdulillah.
and all other participants here in the upcoming conference of your faith.
Inshallah. Inshallah, inshallah. Brother Sultan Amir, how are you?
Alhamdulillah. Dato, how are you, Dato?
Nice to meet you. Fine, fine. Alhamdulillah,
Again,
Alhamdulillah.
great to see you, and thanks for your support as always.
Alhamdulillah.
Happy to collaborate with you, Brother Umar, and then also Dato.
Alhamdulillah. Thank you. Alhamdulillah.
Brother Umar, shall we start?
We have around 79 participants, 80 participants now. We have nearly 400 plus registrations. Not all of them join. Anybody who registered, it's not necessary that everybody joins, but I think it's 9:05 already. Maybe we can start, sister. I think we should start.
بسم الله الرحمن الرحيم والصلاة والسلام على محمد وآله وصحبه أجمعين. السلام عليكم ورحمة الله وبركاته. It is indeed a great pleasure to welcome you to AAOIFI's public hearing related to its exposure draft of the governance standard on syndicated financing. We are holding this public hearing in collaboration with ISRA Research Management Center, Malaysia, and KNAKS, Indonesia. This is the third public hearing for this standard. The first one was held in January, and in last month we held in Turkey a public hearing as well. So this is the third and last public hearing in English. We will hold, inshallah, next week a public hearing in Arabic, and we hope that you can also register. We will provide you with the registration link and the link to the exposure draft in the chat box. Let me take you briefly through the agenda of this session. The first 15 minutes are allocated for the welcoming remarks. Then our brother Umar Mustafa Ansari will present the exposure draft. Then we will have a 10 minutes break at 10:30, and we will continue the discussion and conclude at 11:30 a.m. Now, without further ado, let me please welcome our brother, Dr. Akram Lalaldeen, the Executive Director at ISRA Malaysia, to deliver his welcoming remarks.
Thank you very much, sister. Bismillah ar-Rahman ar-Rahim. Alhamdulillah Rabbil Alameen. Wassalatu wassalamu ala ashrafil anbiya wal mursaleen wa ala alihi wa sahbihi ajma'in. Respected Brother Omar Mustafa Ansari, the Secretary General of AAOIFI, my beloved brother Dr. Sultan Amir, the Director of Islamic Economy and Supporting Ecosystem, KNEKS in Indonesia, brothers and sisters, Alhamdulillah, first of all, we praise Allah subhanahu wa ta'ala for His grace and mercy that we are here, for this public hearing on the exposure draft of AAOIFI governance standard on syndicated financing. And I would like to also take this opportunity to thank AAOIFI and also KNEKS for this collaboration. And we hope, inshallah, in the future, we will have more collaboration like this collaboration and also collaboration in many other areas. Now, brothers and sisters, as usual, I think one of the things that we always hear and see about AAOIFI work is that they come with new standards, and this is one of also the distinguished standard on syndicated financing. And when I go through the draft of the standard in which we are going to discuss today on this syndicated financing, I think, there is the statement which says that first, this was drafted in 2005, and then the committee have seen that there are need to enhance the draft. And I believe that, this is the kind of exercise in which AAOIFI have always, take the lead, in which, they keep on continue to update the standards. And I think in the previous, some time ago, I did also involve in the updating of the Sharia standards. And I think Alhamdulillah, I mean, this is the good, wonderful job that AAOIFI is undertaking, in which, I mean, AAOIFI is updating the standard from time to time. And as all we know that, I mean, you see the development that is taking place in the industry is very fast. You see, so I mean, this kind of exercise will keep us abreast with all the new development that is taking place, and especially when it comes to syndicated financing, for example, it involves quite a number of stakeholders. You see, in which it needs, you see, rigorous standard in order to address the challenges that we are facing in this era of technology, as well as, you see, a lot of other challenges, not only technology, I think economic challenges and whatnot we are facing it now. So, and I hope that inshallah, with this kind of exercise, the exposure draft, I mean, the public hearing, you see, of the exposure draft, it will further enhance. And I'm glad to hear that earlier on, there have been earlier session in Turkey, you see, and there will be a following session in Arabic, in which, again, I mean, this shows, I mean, how we are trying to get the global input when it comes to our standard. And I'm very proud actually with whatever that AAOIFI is doing. And we hope, inshallah, moving forward, I mean, the industry as a whole, you see, we will be adopting the standards that is issued by AAOIFI, and we can together bridge the gap in the practices on the ground, inshallah. So with that, again, thank you very much. And I would like to congratulate again AAOIFI and also all the partners for this noble work. And I look forward, inshallah, you see, to the standard in the future, inshallah, to the enhanced standard in the future. And may Allah subhanahu wa ta'ala give barakah to all the effort that has been undertaken. Jazakumullah khairan, barakallahu fikum. Assalamu alaikum wa rahmatullahi wa barakatuh.
Thank you, Dr. Akram. Now we move on to the next welcoming remark, Dr. Sultan Amir, Director of Islamic Economy Supporting Ecosystem.
Thank you very much. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Respected Brother Omar Mustafa Ansari, Secretary General of AAOIFI, Datuk Professor Dr. Akram Naldin, the Executive Director of ISRA, all participants, ladies and gentlemen, Alhamdulillah Rabbil Alamin, salatu wassalamu ala Rasulillah, amma ba'du. Rabbi shrah li sadri wa yassir li amri wa hlul uqdatan min lisani yafqahu qawli. First of all, I would like to thank AAOIFI and also ISRA for bringing KNIKS in holding this public hearing. It is my great pleasure to give these welcoming remarks in this very important public hearing, syndicated financing. And let us convey also our salawat and salam to our Prophet Muhammad sallallahu alaihi wasallam, the greatest role model for all humankind. Ladies and gentlemen, global Islamic financial assets are forecasted to reach $4.9 trillion by 2025, according to the State of the Global Islamic Economy Report 2022. With the expansion of the Islamic financial sector, there have been considerable advancement in both the structures and methods for implementing Sharia-compliant financings, including Islamic syndicated financing. Islamic syndicated financing is the term used to describe a financing arrangement between two or more banks or financial institutions where each supplies a borrower or the needed the deficit sector with their portion of the financing in compliance with Sharia criteria. Islamic syndicated financing offers either financial institution or the deficit sector a number of advantages. According to the AAOIFI, there is no Sharia restriction on the participation of conventional banks with Islamic banks in a syndicated financing that observe Sharia rulings in its operation, on the condition that conventional banks should not assume the entire task of managing the operation or making decisions on Sharia-related issues. A syndicated financing can be structured using the murabaha, musyarakah, wakalah, ijarah, or tawaruk. A notable example is the US 125 million syndicated ijarah facility between Liquidity Management House, Kuwait Finance House, BNP Paribas, Gate House Bank, Ahli United Bank, and Babuyan Bank as the lead arrangers. other financier and Burgan company for well drilling, trading, and maintenance for the purchase of a Burgan of 4 new oil rigs. Another major Islamic syndicated financial deal took place in Bahrain, amounting to $200 million in 2021. This arrangement is an addition to the current arrangement for state-owned oil and gas holding company, Noga Holding, which is worth around $1.4 billion. Ladies and gentlemen, this public hearing is an effort to improve the governance and transparency of the reporting system on syndicated financing based on the international standard. I would like to encourage the public, the participants, to share their views and suggestions to improve the draft of the AAOIFI financial accounting standard on syndicated financing. Finally, I do hope all of you will have productive and fruitful dialogue and discussion during this public hearing. Thank you very much for your kind attention. Wabillahi taufiq wal hidayah. Assalamualaikum warahmatullahi wabarakatuh.
Thank you, Dr. Sultan. I would like now to invite our brother, Mr. Umar Mustafa Ansari, the Secretary General for AAOIFI, to deliver his remarks.
أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم رب اشرح لي صدري ويسر لي أمري واحلل عقدة من لساني يفقهوا قولي. Sister Zahra has already introduced the process that has already gone through for this standard. So I don't want to go into that detail. Today we are having its a third public hearing in English, and as per decision of our respective boards, normally we are holding at least 3 public hearings in English for every standard and one in Arabic. So on an average, at least 4 public hearings we are holding. The objective of this is to make sure that all the standard setting process of AAOIFI is connected with the ground realities. We are able to actually involve the industry, the experts, the practitioners, the scholars to be part of the standard setting process by providing their valuable input in written form as well as through their comments during the public hearings. So this public hearing session becomes very, very important. For this purpose, we have decided that we will try to collaborate with the most important organizations working in the Islamic finance industry. And we would like to collaborate with them for making sure that this purpose of involvement of the industry at large is served in the best possible manner. And for that purpose, we are so much thankful to our brothers, Dr. Akram Laldeen and Dr. Sultan Amir Hidayat, for being here and for actually from their organization's perspective, being a part of this overall initiative. Thank you very much, my dear brothers and mentors. Sir, this is actually something that needs to be done for the Islamic finance industry on an overall basis. This whole Islamic finance industry needs as a whole to collaborate together to find the best possible results for the benefit of the industry at large. And from that perspective, as I mentioned, this is very important that important organizations collaborate together, particularly for the standard setting area, so that the best possible input is provided. Thank you very much again.
Thank you, brother.
Yeah, please, sister.
We can start with the presentation.
Thank you very much, sister. I believe I'm allowed to share the screen now.
Yes,
thank you very much. So now I'll take you to the subject, that is the presentation of and discussion on the governance standard on syndicated financing. Let me just give you a little bit of background about it first. The standard that is in front of you is a governance standard. AAOIFI already has a Sharia standard on this subject, as mentioned by Honorable Dr. Akram Laldeen. And that standard is actually a very good standard, but that mainly covers the Sharia aspects. For some of the standards, actually, we believe that there are additional aspects of governance good practices, ethical and value considerations, which also need to be enhanced in the overall process. We have seen in the market that syndicated financing being an important aspect of overall financing operations for Islamic financial institutions has several weaknesses, we would say, in terms of governance and controls. And from that perspective, it was decided to enhance the existing requirements which are already there in the Sharia standard and to enhance them to the next level. And this is something that I always say, that if you see the Islamic the Islamic finance related standards that AAOIFI develops, you will see they are all interrelated and complement to each other. Like Sharia standards are the core. They provide the core Sharia principles that are applied for products and services. But that the best rules, even you set them, they can never be like, provide their benefit, like they say that the taste of the pudding is in its eating. So you cannot have the benefit of it unless you have a good implementation and control mechanism. And that implementation and control mechanism actually comes through the governance standards that are developed by AAOIFI. And the same applies to the recording and reporting of the transactions part, which is done through AAOIFI's financial accounting standards. And similarly, the core and the spirit of Islamic finance is ethics and values. You can have best things on paper, but unless you apply the best values and best ethical principles in actual practice, you cannot actually achieve the objectives. And from that perspective, having the ethical structure in the organization, as well as having the ethical values being practiced by the Islamic finance professionals, all professionals who are associated to Islamic finance, till that time you don't achieve that level, you cannot achieve the real purpose of those transactions. So these ethical standards also complement that part. And last but not the least, the auditing and Sharia auditing is needed to keep a check and balance mechanism on all of these rules and principles related to products, services, recording, reporting, controls and governance, and ethical values. So from that whole perspective, this is a spectrum of of areas and services related to Islamic finance that AAOIFI covers through its 5 sets of standards. This is a particular example of, in this case, that the Sharia standard is already there and it's a very nice Sharia standard. But when it comes to the ethical behavior, when it comes to the good governance principles, when it comes to having the good controls in place, it is very important to enhance the Sharia requirements and at the implementation side by providing the governance and control mechanism for that. And this standard aims to achieve that objective. And I can tell you, based on my experience, that and not only my personal experience, but also the experience that was shared by the working group and the board during the process of development of this standard, and based on the earlier public hearings that we held, that the overall standard, the area that this standard touches, that is the syndicated financing or consortium financing, as we say in some of the jurisdictions, that actually needs to be applied and implemented I would say that unless this is applied and implemented in a holistic way from Sharia and control perspective, this is one of the weakest areas in Islamic finance. And one of the weakness, which actually the reason of those weaknesses is that at times the conventional institutions are applied, are also part of this one. So their treatments and their preferences are applied in the transactions. Similarly, when there are multiple Islamic financial institutions working in syndicated finance, even their own individual Sharia principles, their Sharia approvals, their control processes, their transaction structures at times are different. So at times, some of the aspects which are very important to be addressed from Sharia standpoint and from control standpoint are overlooked. So from these all perspectives, we actually believe that it's a very important standard, and I hope that today's public hearing will provide more input into that. Just as a common rule, please provide your questions and comments in question Q&A tab, not in the chat window. This is because I will be addressing all the questions that come to the Q&A tab. Secondly, with regard to allowing some senior people to actually contribute by allowing them to switch on their mics and cameras, we will try to do that subject to time availability and number of comments that we receive. So first, kindly provide your comments in the Q&A tab, and if the time permits, we will allow you to actually contribute by switching on your mics and videos as well. With that, I will take you through the standard, as I have provided you some of the background about the standard and about the history of the standard. So I will be skipping these sections related to preface and introduction, PR and IN sections. However, I will request if anybody has comments on any of these sections, please provide. Secondly, those of you who were not able to read the standard completely before joining in, and those who actually have some points but need more time to to write them down, they can always submit the comments in writing to governance@aoifi.com. With that, I'll take you through the body text of the standard. So first, we'll discuss the objectives of the standard. The objective of this standard is to set out a framework of for governance of syndicated financing transactions over the entire life cycle of such transactions in line with the best governance practices and Sharia governance. Implementation of such framework in turn is expected to result in enhanced stakeholders' confidence in AAOIFIs and Islamic financial markets, particularly with regard to the compliance with Sharia principles and rules, ensuring transparency and fair and equitable treatment of the stakeholders. This standard complements and shall be read in conjunction with AAOIFI Sharia Standard 24. So this standard does not replace Standard 24, rather it complements and enhances upon the Standard 24, Sharia Standard 24 syndicated financing. Sister Zahra, kindly just make a note of it. I remember somebody had a discussion that the last line of paragraph 1 needed more, needed to be reworded more appropriately. With the best governance practices and Sharia governance, I think it should be either best practices of Sharia governance, or it should be best practices of corporate and Sharia governance. Okay. Okay. So I think this was I earlier received this comment also, so it just came to my mind. So please keep a note of it.
Inshallah.
Scope. This standard set out the governance framework for the overall life cycle of the syndicated financing transactions, comprising deal origination, award of mandate, marketing and placement, financial close till determination, whether early or as per the original maturity phases. The responsibility to implement this standard rests with those charged with governance and the management of lead arrangers, syndicate participants, and AAOIFI's customers in their respective capacities. The guidance provided in this standard, particularly in respect of pre-mandate phase, also known as the deal origination phase, and financial close phase, shall also be applicable mutatis mutandis on listed and unlisted sukuk issuances, insofar as the same is not in conflict with GS12 sukuk governance. Let me just explain quickly this paragraph 6. Actually, the standard number GS12 on sukuk is actually quite comprehensive standard, but that standard discusses the sukuk issuance. But at times there are syndications and syndication type activities that actually take place. These include the deal origination part and the financial close part, which actually are quite similar in case of sukuk as well as the syndicated financing. While AAOIFI governance board and the respective working group were working on this standard, they realized that The Sukuk governance standard deals with the Sukuk life cycle, but it does not deal with some of the activities which are before the Sukuk life cycle. So from that perspective, it was decided, it was considered that either Sukuk standard may be amended to incorporate those phases similar to this one, or to create a cross-reference. So the decision was that this syndicated financing related initial functions, which are before the Sukuk life cycle, that is the deal origination phase and financial close phase, because of so many similarities with Sukuk origination, they also be considered. And particularly for some of the enlisted Sukuk, this might be quite similar. So from that perspective, it was decided that Sukuk standard should also be considering, the entities implementing Sukuk standard should also consider implementing the additional requirements of these two phases. With regard to definitions, I'll take you through the important definitions. I'll not read out each and every definition, but some important definitions for sure are which are important to understand the standard. I'll read them out. So arranger, also referred to as manager in certain jurisdictions. There, again, this is a common issue that in different markets, different terminology is used. Arranger is a common nomenclature for that, but even manager and some other terms are used. So we have mentioned arranger as a definition in the standard, and we defined it, and we said that it is also referred to it as manager. We will welcome any comments with regard to other terminology that is used in different jurisdictions. So an arranger is one or more IFI, CFI. IFI or CFI, Islamic financial institution or conventional financial institution, individually or collectively mandated. Sister Zahra, I think this one is used at the first time in the standard here. Just take a note of it. Whenever we use it first time, we might need to define it, okay? IFI and CFI, okay? Sure. Individually or collectively mandated by the customer of a syndicated financing transaction to arrange finance by way of forming a syndicate of eligible IFIs and or CFIs. An arranger, unless specifically mentioned otherwise, includes a lead arranger. There can be more than one arrangers as well. So if there is only one arranger, that is lead arranger. But if there are more than one arrangers, then you need to identify a lead arranger. A customer in the specific context of this standard is the person availing a financing facility under a Sharia compliant mode. Sister Zahra?
Yes, brother.
It has to be Sharia compliant mode of financing by way of a syndicated financing transaction. Fatwa refers to a Sharia opinion presented to, this is the definition as per our AAOIFI Sharia standard, and we keep it in our government standards as well, so I'm not repeating it. Hybrid syndicated financing transaction in the specific context of this standard is a syndicated financing transaction which includes a Sharia compliant branch as well as a conventional financing branch. Information memorandum, also referred to as placement memorandum, is a disclosure document that describes and presents for the potential syndication participants a financing proposal along with the prospective customers' organizational, operational, and financial information to facilitate evaluation of such proposal for the purpose of participation as a syndication participant. Inter-financer agreement, also at times referred to as syndication agreement and or syndication terms of reference, is an agreement among the financiers and syndication participants, including IFIs and or CFIs or classes of syndication participants, describing inter alia their respective rights and obligations with respect to a syndicated financing transaction, the customer and the underlying asset and or business, and the respective securities. The details as to how the transaction shall be executed, how Sister Zahra, a comma is missing from here. And I think I'm not sure whether it's missing in the body text of the standard or here in the presentation only. How the payments from the customers are to be received and be apportioned among the syndication participants, etc. Just a note that this agreement in essence will serve the same purpose as intercreditor agreement serves in a conventional syndicated financing transaction or any other financing deal. Sister Zara, intercreditor agreement should be in running case.
تم.
Islamic financial institution, we have defined the Islamic financial institutions in multiple standards. This is the same definition. Only one thing I would like to clarify here, that since the syndication involves conventional financial institutions as well, so let me clarify that according to this definition, a window of a Islamic finance window of a conventional financial institution is an Islamic financial institution in itself. So when we say conventional financial institution, we are talking about the conventional wing of the financial institution, not the Islamic wing. So when we say in this standard that conventional financial institution cannot become a lead arranger, that applies to the conventional financial institution that is coming in as a conventional participant and not as a Sharia compliant participant. But if a conventional financial institution having an Islamic window comes through its Islamic finance window as a participant or an arranger, so in that situation, it will be considered an Islamic financial institution. So this definition, although it's very much there in other standards, is also relevant here for this very important purpose to clarify that Islamic financial institution includes conventional financial institutions windows. The lead arranger, also referred to as lead mandated arranger or lead manager, is an AAOIFI CFI mandated by a customer of a syndicated financing transaction from amongst the mandated arrangers to lead the process of arranging a syndicated financing transaction. At times, the responsibility of a lead arranger may be shared by more than one co-lead man arranger as per the defined terms of reference in the mandate. Sister Zahra, please make a note of it because at times there is only one arranger. So when we say from amongst the mandated arrangers, we need to keep a note of it that where applicable, or we need to just recheck this wording. Okay. Mandate, by whatever name called, is usually the first document to be agreed on a syndicated financing transaction, which initiates the syndication process, sets out the proposed terms of syndicated financing, and authorizes the arrangers to arrange the arranger or multiple arrangers to arrange the syndicated financing transaction. Provisional fatwa, this is important. Provisional fatwa in the specific context of this standard is an initial fatwa issued by the lead arrangers Sharia Supervisory Board. We need to keep in mind that it will be issued by lead arrangers SSB to approve the basic structure of the syndicated financing transaction that would help the documentation team draft the relevant draft. Actually, the language is correct, but sister, we can consider changing it to in drafting the. Although it's okay, will help the documentation team draft, but since the wording is may get confused, so we can say help the documentation team in drafting the relevant syndicated financing transaction documents and facilitate the other AAOIFIs SSBs to have an understanding of the transaction structure. Now, this provisional fatwa, we discussed this thing that can a syndicated financing should have a single board. It was one of the possibilities that was discussed in the working group, and I believe that this is an important that with regard to this provisional fatwa thing and with regard to the possibility of having a single Sharia board for the purpose of syndicated financing, we should, because for sukuk, AAOIFI has required a single Sharia board for the sukuk, but for syndicated financing, we did not require a separate Sharia board or a single Sharia board. The reason was that it was discussed that that even if we put a single Sharia board as a combined Sharia board, but the individual responsibility of the relevant Sharia boards as per AAOIFI standards and as per the respective regulations of the country will still remain there. So from those perspectives, it was considered that it might become an additional burden that the syndicated financing board will also function, and then still the individual institution boards will have to review the transactions. So from that perspective, it was decided that there should not be a single Sharia board. Rather, the lead arranger Sharia board should do the initial work by providing a provisional fatwa on the transaction structure and the initial plan of the transaction. Why this fatwa will help one way to the legal team and to the product team to actually structure and document the transaction, while it will also help the other Sharia boards to have a better understanding, because some work is already done by this board and a fatwa actually explains the structure and the Sharia rules for that. So from that perspective, it will save time for the other Sharia boards of respective institutions and will help them understanding the structure quickly. And this was the way understood to streamline the process and improve the process. However, we will welcome the comments from the practitioners and the scholars in this context, particularly with regard to the need for having a full Sharia board for the syndicated financing, or if they feel that this provisional fatwa approach is good enough. I think there is a comment in the Q&A box. Assalamu alaikum. Can an individual arranger make syndicated financing lonely? Please confirm your definition of arranger. Mr. MFU Mubarak Farazi. Thank you very much, brother. Walaikum assalam. Thank you very much for your comment. The quick answer is that syndicate by or consortium, by its very meaning, involve multiple participants. So the participants have to be multiple. However, doing a single, one of the participants being a single arranger, we don't have a problem in that. We actually said that the arrangers can be one or more. We have actually, initially we were thinking of putting only one arranger, but then we realized that in the market practice, at times, because the arranger also takes the fee, so at times even some of the banks become co-arrangers to share the fee part as well, because they are not willing to come without a fee element. And this actually works between the banks within the organization, within the organizational structure of the bank, where the investment banking department is actually going to do the deals and playing the role of the arranger or lead arranger and taking the fee part, while the corporate finance or other relevant department takes the returns on the investments coming as a financing result. So actually this internal sharing is also important, and because of this internal sharing as well as sharing within the banks, we have seen that there are multiple arrangers in a number of transactions. So yes, a single individual arranger can be the arranger, but there cannot be a single participant. Obviously, the consortium means that at least there has to be a consortium of participants. But with regard to arrangement, yes, it can be a single arranger. And actually, originally we were thinking of writing about a single arranger, but we realized that it will not serve the purpose. So we put the responsibilities. Some responsibilities are on the lead arranger, and some responsibilities are on the arrangers together. And that's why I mentioned even to our team also earlier in the definition that in the earlier definition of that we were talking about this one. I think where we were talking about, I think we discussed this thing in amongst the mandated arrangers in the definition of lead arranger. So here I identified to our team that form amongst the mandated arrangers has to be where applicable, because it can be a single arranger also. So we will consider clarifying it in a better way, so the question that you raised, another similar question, may not come to mind, and it should be very clear from within the definition. Thank you very much, brother. Brother Abdurrahman Safi says, Assalamu alaikum. I think the question is still not there. I think he is tapping the question, maybe. Yes, now we receive the question. As you said that Sukuk governance deals with Sukuk life cycle, but syndicated Sukuk deals with the life before Sukuk life cycle. So may I know how it works? No, brother, we are not saying that syndicated Sukuk deals with life before life cycle. We are saying that Sukuk life cycle starts when you actually initiate the transaction. However, at times there are steps before that. For example, if a bank, if a company wants to issue sukuk, they will be appointing some party to initiate do this whole work for them to initiate the sukuk. This may include unlisted sukuk where the sukuk whole process is done, but that is not listed and not made available at large. Rather, only 2-3 parties or maximum 5 to 10 parties are keeping that. So from those perspective, it is also important that the mandate part, arrangement part, sharing of the mandate fee and arrangement fee, etc., these are relevant elements. So from that perspective, we said that even in case of sukuk, the first two phases, that is the financial close phase and the deal origination phase, those phases are quite relevant to sukuk origination as well. And that's why we said that sukuk standard is not covering those phases. So it should be like, either we would have amended the sukuk standard, or we would have put it here and said that in case of sukuk, this will also apply. So that's the second option we took. We said that in case of sukuk, these requirements in these two phases will also apply as applicable. Not all of them, but most of them might be applicable. I hope my point is clear to you now. Thank you, brother. Let's move ahead. We have a long way to go. Sharia principles and rules is the definition of the hierarchy of defining Sharia principles and rules as per AAOIFI standards, and this is actually quite consistent in all our standards. So we are not going to change it, change this one as of now. We just keep it consistent. So even in this situation, the respective Sharia boards approvals are applicable. So item number 5 is still the approvals and rulings given by the Sharia supervisory board of the respective institution. So we did not make any change in the hierarchy of determining Sharia principles and rules. There is another question, I believe, by Paras Javed. It is clear that CFI can't lead Islamic syndicate, but can a purely conventional bank participate as a participant for issuing syndicate IF product? Don't we have error in the source of funds that CFI should be bringing into the syndicate? I think we are jumping a bit. So if you allow me kindly, I'll answer this a bit late, if you allow me. So when we go to that section, I'll be able to better explain it. Okay. It's a very valid question and very good question. Only thing is that there would be more appropriate place to answer that one. Sharia compliance is the adherence with Sharia principles and rules of the syndicated financing transactions, the structure, relevant features, contracts, and various other arrangements, as well as the operations and activities related to the syndicated financing underlying assets during the entire life cycle of the syndicated financing transaction. This is an important definition that we brought in because it's not only the documentation part, but also the compliance of the underlying assets with Sharia principles and rules is important. And that's why we have kept it as a definition, which is a very important definition. And we have put some controls to ensure that as well. Syndicated financing, also referred to as consortium financing in certain jurisdictions, refers to a group of IFIs jointly financing through any Sharia compliant mode of financing. If you see the syndicated financing term, we have used mainly for Islamic only, because this is the standard for Islamic financial institutions. We have covered the hybrid part separately, But the normal syndicated financing, we presume, has to happen only between Islamic financial institutions. Syndicated financing underlying assets are the tangible assets, user-front and services, and or the ownership of the assets of particular projects or special investment activities underlying a syndicated financing transaction. Security agent, also at times referred to as fiduciary or trustee, is an entity appointed by the syndication participants or by the lead arranger on their behalf to serve as an agent to hold and or enforce rights on the syndicated financing underlying assets and or securities on behalf of the syndication participants, and to safeguard their interests in accordance with the specific terms of reference. Syndication participants, also at times referred to as syndicate financiers, include the IFIs and or CFIs agreeing to participate in a syndicated financing transaction, and those charged with governance is the definition of IAESPA, International Ethics Standards Board, which include the board of directors and the board of directors committees, etc. for that purpose. This is also a definition adopted from ISPA, and we have copied in multiple standards, so I'm not going in details. So if there are any further comments, I can see one more comment from Brother Hikmatullah Farhad. I kindly request your honorable organization to share the presentation with us. Brother Hikmatullah, this presentation is exactly reproducing what is written in the standard. And the standard is always available on the website. So we normally do not share this presentation. The standard is available on the website. The exposure draft of the standard is available on the website. When the standard is finalized, that is also available on the website for reading. So from as a matter of policy, presentation is exactly representing the same. There is nothing additional to that, and we do not share it as a matter of policy. Thank you very much. Now, coming to key pillars and principles of syndicated financing transaction governance, we have 5 core pillars of governance as per AAOIFI. The first one is Sharia compliance, second is accountability, third is fairness, fourth is transparency, fifth is responsibility. These are the 5 governance pillars that are applied in most of our our governance standards. So they are consistent. So these are just reproduced from other standards. So, however, the principles of governance that are actually defined as the core principles in line with these pillars that actually govern the whole process of syndicated financing are provided here. So the first principle is about effective Sharia compliance structure, that they need to have you need to utilize their own existing governance structures like Sharia board and all to allow her to have a proper Sharia compliance process. And the minimum requirements of AAOIFI Sharia Standard 24 and other relevant standards, like if it is a Murabha syndicated finance, then the Sharia Standard on 24 as well as the Sharia Standard on Murabha needs to be applied. Similarly, other relevant standards apply. So that is on that part. Fair treatment of and among stakeholders. So the lead and arranger, other arrangers, and the customer shall ensure fair treatment of and amongst different stakeholders, and those charged with governance and senior management of the lead arranger and the customer shall be accountable to other stakeholders as per their responsibilities. Equitable and fair treatment of and amongst syndication participants. So this is one of the most important areas. You will see a lot of requirements of this standard are focusing on this requirement of fairness, that the arrangers have to be fair between them, and the arrangers have to be fair with the participants. So it should not be, we have seen so many examples, and while we were discussing on this, we identified so many different examples with regard to sharing of fee and the distribution of profit and the treatment and then sharing of information on a fair basis. Then next point is about transparent interaction of and among syndication participants. So the fairness cannot be achieved unless transparency is there. So the participants have to remain transparent to each other, and the customer has to remain transparent to the participants. And then we have the effective oversight as accountability and responsibility part. Transparency and mutual disclosures are important, and a code of conduct and ethics need to be applied. AAOIFI's code of ethics for Islamic finance professionals and IFSB guiding principles on the code of conduct. Those are also to be applied for the purpose of ensuring that there is like ethical conduct. Now, coming to part B, first we will define what are the relevant parties, and we will define the life cycle, and then we'll go to the life cycle and requirements applicable at life cycle. AAOIFI has a the AAOIFI has a style that there are governance standards which are transaction based, and there are governance standards which are institution based. So those is institution focused and transaction focused. So the transaction-focused standards of AAOIFI, like Sukuk standard, like Islamic crowdfunding standard, which is being finalized, like this standard, which is in front of you. These are transaction-focused standards. So these are actually developed on the basis of transaction life cycle. So the whole structure of that standard is as per transaction life cycle, and the responsibilities and duties and the functions of different parties are defined at different stages of the life cycle. While the other standards of AAOIFI are the institution-focused standards or the function-focused standards. And those standards actually have the functions to be defined, and the responsibilities of the respective functions, departments, organizational structure, all those things are defined in that style. So these are the two clear styles of AAOIFI governance standards. This is standard because it's related to a transaction. So it is a transaction-focused governance standard, which means that the whole governance process and controls and other requirements are defined throughout the life cycle of the transaction. I think we have one more question answered here. Brother Rehan Wahid, 9.1 should read as effective Sharia compliant. I think this one is 9.1. 9.1. Just give me a second. Okay, brother, I think it's a good point, but it is a misunderstanding, and maybe we need to correct the wording. We are not talking about the transaction structure to be Sharia compliant. We are talking about Sharia compliance mechanism to be in place. Sister Zahra, it's an important comment, but I think I'll take the comment other way around. We were not talking about the transaction structure to be Sharia compliant. We were talking about the governance structures to be effective, Sharia governance structures to be effectively applied on that. So I think here, if we replace the term structures with mechanism, that would be in mechanism and processes, it will avoid that confusion. Thank you very much, brother Rehan, for your kind comment. But we will call it effective Sharia compliance and governance mechanisms. Okay, so I think this will serve the purpose of your comment. However, we were not talking, if you see the text, we were not talking about the transaction structure, we were talking about the governance structure. But since governance structure and transaction structure can be confused, we should call it governance and control mechanism. So Sister Zahra, please make a note of it. We need to make necessary amendment here. Thank you very much again, Brother Rehan. So now, what are the main parties here? The lead arrangers, the arrangers, the security agent, the syndication participants, and the customer. Most of the responsibilities are related to lead arranger, you will say, but you will see. But overall, we have covered most of the requirements during the life cycle. All the parties of a syndicated financing transaction shall be responsible at each respective phase of a syndicated financing transaction for compliance with the requirements of the standard and their respective areas of responsibility. Now, the life cycle, we have divided life cycle into 6 phases: awarding of mandate, marketing and negotiation, transaction close, continuity, changes in the transaction before intended maturity, like early maturity or rescheduling, etc., maturity of the transaction. So these are the 6 phases, and we have defined the requirements for each of the phase. This standard I don't need to read everything here. Let me take you to the part C now. Considerations at the time of awarding of mandate. Now, first part we have mentioned about transparency and disclosure. So at the phase of awarding of mandate and respective negotiations, the potential lead arranger and other arrangers and the potential customers shall exchange all current, relevant, and accurate information and/or details about the customer, its financial position and operating conditions, the underlying assets, the proposed syndicated financing transaction, and its structure. This is very important to be fair and transparent at this stage. So the transparency at both ends, that is the arrangers between them and the customer with the arranger and arranger with the customer, all these things are necessary to be very transparent. The potential customer shall, through an expression of interest request, preferably to be available publicly, disclose in a transparent manner its proposed terms of a syndicated financing arrangement and relevant preferences to all the competing potential arrangers so as to provide them a fair opportunity to offer their services. There was an argument on this point that some of the people, some of the participants or experts felt that it is not necessary to be transparent here. It is enough to appoint one single arranger without going through this process. We believe that going through this process is in the benefit of the customer and the arranger both. Like the arrangers end, they get the fair opportunity, and at the client level, the customer level, they also get a fair opportunity to get the better terms. Because dealing with a single bank, you might be comfortable working with a single bank or a single arranger, but this is a reality that working alone with one single bank or AAOIFI will not be giving you the appropriate opportunity to get the best rates and best services. So this is something important to keep the option open. Again, there can be arguments about this issue, because some people will say, okay, we are comfortable with one bank, why we go to others? The point is that if it is like, if the owner, if it is single owner company and he's comfortable, no problem, because there are no other stakeholders involved. But if it is a company which where the management directly coordinates with one single bank or one single AAOIFI without being fair and giving opportunity to others, that might be not be like, fair for some of the stakeholders of the customer itself, maybe not in the favor of some of the shareholders. So it is preferred that there should be a publicly available expression of interest. However, if it is still a single or maybe limited, like, arrangers, potential arrangers, is still a transparent communication of terms of syndicated financing, and the needs should be defined. The mandate of a syndicated financing transaction at a minimum shall include document the initiation of the syndication process, set out the proposed terms of the syndicated financing transaction along with the necessary details about the need for syndicated financing and the underlying assets and transactions, document the customer's commitment to ensure compliance with the Sharia principles and rules. This is very important. I'll explain this point. Actually, there was an argument that can a customer be enforced about some requirements as per a governance standard or a Sharia standard. The point was that normally AAOIFI governance and Sharia standards are adopted for Islamic financial institutions. So they apply to Islamic financial institutions, not to their customers. But we believe that this is a transaction-specific standard, and it cannot achieve its purposes if we keep the customer out of the ambit. So while it is also always possible for the regulators, because at times, for example, when there are a lot of requirements that are applicable on customers under the prudential regulations as well. For example, they need to maintain some ratios and things in order to be able to get financing under the prudential regulations. Similarly, Sharia, Sharia terms and conditions with regard to, for example, a murabah transaction can never be achieved if the customer is not compliant. For example, if the customer purchases the goods as agent and consumes them without purchasing from the bank, that is a fault that will make whole Murabah transaction void. So it is not possible that in Murabah transaction, you can say that, okay, IFI has to be Sharia compliant and the customer, there is no need for the customer to remain Sharia compliant. The point is that theoretically everybody agrees that customer should have responsibility. But the problem is as to whether from the legal perspective, we can put the responsibility on the customer. So now what happens in case of the example that I was giving for Murabaha, how the customer is become liable because he signs on the agreements which are according to the Sharia compliant structure. So now he has contractual obligation to follow the requirements. Now the issue is that in a syndication financing, how to put responsibilities on the customer. So we put that it is very important that the mandate should include the customer's commitment to ensure compliance with the Sharia principles and rules, relevant regulations, and the requirement of this standard as applicable to the customer. So this is very important to document this, because at times the regulator may enforce on the customers also to follow the requirements. But if that requirement is not there, then this is the way to make sure that the customer follows this requirement. This was one of the points most debated in the working group and the board. So from that perspective, we would like to invite specific comments on this area as to how you see you feel that the customer should be responsible, and what would be the appropriate approach in addition to this, that the customer himself signs the mandate that he is going to follow the requirements of this standard. There are 2-3 comments. Let me complete this section and then I'll take the comments. Authorize the arranger to arrange the syndicated financing transaction. I think Sister Zahra, either something is missing or there should be a full stop instead of a semicolon here. So either when we copied from the standard, there might be a typo error here, or otherwise something is missing. Just keep an eye. Let me know if something is missing. I think it is just a typo error that there should be a full stop here instead, because and was appearing at C. Let me take comments here. Okay, we have comment from Brother Ahmed Arif bin Muhammad Arshad from RHB Islamic Bank. At which point of syndicated financing life cycle that the Sharia compliance review or Raqaba wa Tadqiq should be taking place? Brother Ahmed, it's a good question. That's why I was defining that from AAOIFI perspective, we put it like, put it as in the life cycle. And in 9.1, we mentioned the overall governance structure of the individual institution shall apply. So there are two different things. Number one, Tadqiq is audit and Raqaba is compliance review. AAOIFI distinguishes the compliance from internal Sharia audit. So the internal Sharia audit is not mandatory. It will be subject to materiality and sampling selection. But the responsibility of the Sharia compliance department will remain there as per a normal process of standards of the standard. So we have made reference that the function of the Sharia compliance function of the lead arranger shall apply in due course. However, the internal Sharia audit will be according to the sample. So there can be, it's not necessary that every syndicated financing transaction is selected in the sample of the internal Sharia audit. And there is no time defined for that, because this will be according to the time plan of the internal Sharia audit. Internal Sharia audit is a post facto or a post facto exercise, which means that the transaction is done and internal Sharia audit just ensures that it was done appropriately. But Sharia compliance may need to play their role at the respective stages of the transaction as per other AAOIFI standards as well. We have standard number 9, which defines their responsibility with regard to each of the transaction. So the respective participants bank as well as arranger banks will have to involve their Sharia compliance function in due course as per a normal transaction. Thank you very much, brother, for your comment. Then we have a comment from brother Ashaduzzaman. Assalamu alaikum. Is the additional part of Sharia standard? Is this additional part of Sharia standard number 24? It's not part of it because we have two different series: Sharia accounting governance and standard series, and the Sharia standard series are actually independent of each other. But this standard enhances upon the requirements. So technically, we will not say it's additional part of, but we will say that this standard provides additional guidance on implementation of Sharia standard number 24. So the Sharia standard number 24 tackles mainly the Sharia part and touches upon some of the governance elements. But this one enhances significantly on the governance and control part, but does not cover Sharia standards by itself. So it's not a Sharia standard. So the Sharia requirements are not here. Sharia standard requirements are in 24. Sharia standard 24 also touches upon some of the Sharia governance requirements, but not in detail. But this standard addresses the Sharia governance and control requirements and the ethical requirements in detail. Brother Muhammad Iqbal Aris Rizki Maulana, Assalamu alaikum. You're from Indonesia. Thank you and welcome, brother. Permission to ask sources related to cryptocurrencies as a medium of exchange. Brother, for cryptocurrency, I can actually, we will go out of the topic of this standard. In a nutshell, I can say AAOIFI Sharia board is not at present convinced about permissibility of cryptocurrencies. It has not put it in the upcoming initial agenda. Till the time AAOIFI Sharia board does not allow cryptocurrencies as a specific under a specific standard, AAOIFI's view for cryptocurrencies is that we should avoid cryptocurrencies. So this is the nutshell answer to your question, but we will be going out of discussion for today. So brother Iqbal, we can discuss it separately at some point of time. Assalamu alaikum. There is a participant whose name is not appearing. It is because he or she has logged in from his or her mobile Galaxy S8. So first I request Zoom allow you to rename yourself. So my request is to rename yourself and mention your name. I suggest that the customers must be provided with a clear guidance and checklist on how they should conduct activities to ensure Sharia compliance at their part. It's a very good point, a very good point. Sister Zahra, please take a note of it, that we should put it in the responsibility of the lead arranger to provide clear guidance to the customer with regard to the Sharia compliance steps, maybe in form of a checklist or guidance that need to be done. So we should put it as a responsibility of the lead arranger. It's a good point. I think it's an important point. Thank you very much. This is Brother Hassan Habib. Assalamu alaikum. If we get this presentation, slide copies will be quite helpful. Unfortunately, as I said, that we do not share these presentations. It's a matter of policy. The standard PDF version is always available on the website, and the presentation is exactly the same as the exposure draft PDF version. So kindly use the exposure draft PDF version, and that can still be provided. If I may request our team to provide a link to the standard in the chat box. Okay, thank you very much. There is a comment from Yasni Abdqahar on the point of requirement for the customer to comply with Sharia provisions in the mandate letter. From practice perspective, the mandate letter typically relates to the appointment of arranger to structure and arrange the syndicate facility. The requirement for customer to follow Sharia requirements is provided in the facility agreement. Brother, you are very much right. This is the current practice. We don't disagree with you that this is the current practice. However, the facility agreement requires Sharia compliance for the transaction. But what about the requirements of fairness, requirement of transparency, requirement of equitable treatment, which are contained in this standard? The facility agreement is done after 2 stages or 3 stages. So what about the first, second, and third stage, particularly the fair treatment between the stakeholder part? That is not included in the facility agreement. A requirement of compliance with Sharia principles and rules will remain in the facility agreement that is currently there. But what we have recommended that in addition to the current practice of appointment of the arranger, at the inception, because it's going to be a Islamic finance transaction, syndicated finance transaction. So at the inception, we have recommended that the customer shall commit that it will ensure compliance with Sharia and compliance with the requirements of this standards and relevant regulations. There is no harm in adding that commitment at the part of the, to be honest, if we want to do a fair, like, my past experience is in audit. Whenever there was an audit client coming to us, we were so happy to get a new client because obviously there is an earning coming from that. But at the same time, we used to put a 20-page engagement letter, which was putting the responsibility of the customer, and while appointing us, they were fulfilling, they were committing that the client will follow all these requirements, which included the legal requirements and providing information and providing access to information, and whatever requirements were there. We said that at that time of appointment, the customer responsibility was also defined. I'm just giving you an example based on my personal, background. But in a lot of other industries also, it is quite common that the appointment letter should include the responsibility part of the customer also. So that is what we are asking here, that when the customer appoints the lead arranger, he should actually commit at his end that he will remain Sharia compliant and fulfill the requirements of this standard. And I believe that in any of the professional practices, this would be considered as a good practice. Thank you very much. No disagreement to what is happening as of now, but I'm just explaining that what is being recommended by this standard as an improved practice. Okay, this Galaxy S8 is our old friend, old not in terms of old in terms of age. Old friend means our friendship goes quite old. This is Brother Sadaqat Khan. Welcome, sir. But it was like, it was a shock that you don't know how to change it. All the time you are speaking in the conferences and attending the conferences, you should know how to change the name in Zoom. So thank you very much, sir, for being here, and we always learn from your comments and your experience. Thank you very much, sir. I suggest your next comment is, I suggest that the customer must be provided with clear guidance and checklist. That is the point. Yes, we agreed to that already. Thank you very much, sir. This is a very valid point, and I believe that we should add it in the responsibility of the lead arranger. Then we have Dr. Irsa Tri Wahyuni from Indonesia. Welcome. Syndicated financing is very important for PPP project in the infrastructure development. Does the standard require the arranger must be a Sharia institution like Sharia Bank or Sharia Venture Capital? Can arranger be of syndicated financing come from non-Sharia institution? And also, please finish your presentation and do not interrupt your presentation by answering questions. Please answer the questions later on. Thank you very much, Dr. Irsa. You are welcome, and you have a very good comment. I think this comment is similar to the comment from Paras Javed earlier. So I'll answer the comments together when we reach that stage. It's a very good comment. However, to be honest, it's not a lecture. It's not a lecture. It's not just an explanation of the standard. It's a public hearing event, which means that we are here to listen from you and not only to speak here. To be honest, this is, I would prefer more and more if I speak less and I present the presentation less, and I would be more happy if everybody coming here has read the standard and they bombard me with the comments. I'll be more happy with that. So we keep a, you know, we'll try to keep track of the time. I can understand it's a long standard. We may not have enough time towards the end, and it's not necessary for me to read out everything important. Rather, I can identify and explain only the important things going forward. But please allow me to take comments and questions, because this is the purpose of this public hearing event. This is why we actually have requested all of you to come. So it's our learning process. To be honest, it's not a training session for you guys. It's our learning process that, as in the standard setting process, we want to learn from you. Thank you very much. Your comment is very valid. We will, but I'll answer it because there are requirements there already. So I'll answer it going forward. Next comment is that from Arinto Virioto, is the mandate should always include a clear market clause which give an exclusive arrangement for the arranger during the time stated in the mandate and contain a promise from the debtor not arrange other mandate at the same time. It's a very good point. I think we have covered something like this in the standard going forward. We may improve the wording when I reach there. We'll take your comment again and we'll do that. There is an anonymous attendee. The name is not there. I think that asking a customer to adhere to any AAOIFI rule cannot be accommodated by a non-Islamic bank or institution. Not sure what exactly they will be asked to do in practice. This question is also related to that question. Okay, now we have 4 or 5 questions on that area. So let me take you to some of the requirements first, then I will come back to this para. So we were at para 13, but let me take you to the actually the things are divided in 2-3 different places. So let me clarify what is the requirement of AAOIFI, then we'll reach the respective sections. I'll explain it. But since there are 3 or 4 questions at the same related at the same area, so let me clarify that part. First, AAOIFI governance standard is asking the lead arranger to be Sharia compliant, number 1. Number 2, we are asking that the syndicated financing, the term syndicated financing that we have used here is for Sharia compliant only. We have used the term hybrid syndicated financing where Sharia compliant tranche and the conventional tranche are there. However, we have required it very clear that the lead arranger must be appointed separately for the Sharia compliant tranche. Even if it is a transaction which is led by a conventional financial institution, still we said that the Sharia compliant tranche is to be led by a Sharia compliant bank or institution. With regard to the definition of Islamic financial institution, I already defined to you that the Islamic financial institution includes the conventional financial institutions Islamic window. But a conventional financial institution without an Islamic window is not considered to be an Islamic financial institution, so it cannot be part of a Sharia compliant syndicated financing. If there is a conventional transaction lead, then that conventional transaction lead manager or lead arranger cannot ensure compliance with Sharia principles and rules because it does not have a full-fledged Sharia governance structure. That's why there must be a Sharia compliant institution, an Islamic financial institution being lead for the Sharia compliance transaction structure part. These are the requirements which are contained in different parts of the standard at different stages. with regard to this whole structure thing, and we have covered it through the definitions and through different sections in different places. So I'll identify those when we reach those sections in different stages, but this is probably the answer to this anonymous attendee and to Paris Javed and to Dr. Irsa, that this is the requirement, that from this standard perspective, no conventional financial institution can lead a Sharia compliant syndicated financing. They can lead a hybrid one, and in the hybrid one, the Sharia compliant lead needs to be identified separately. So the Sharia compliant lead arranger, for that purpose, whatever the requirements are there in this standard for the lead arranger, even in case of hybrid one, will be done by the Sharia compliant lead arranger. We do not want, one more thing, very important. It's not only about, some of the governance principles actually come from the values and from the behavior that is preferred. So for example, there is Quranic principle of ta'awanu alal birri wat taqwa wa la ta'awanu alal ismi wal udwan. You should not be collaborating for anything of sin. So from that perspective, we have a clear view that Islamic financial institutions cannot lead a hybrid one. They can lead only the one part within the part Sharia compliant part within the hybrid one. They cannot become the lead for, so they cannot invite conventional to come and become part of a hybrid one. They need to be doing either completely Sharia compliant or they can do it hybrid. There is one option. Some people said, okay, what happens if they don't have enough money and all that, but they still need to get so the option is sukuk. Then you don't do syndicated financing, you create a Sharia compliant sukuk structure and conventional institutions can subscribe to the sukuk. But bringing conventional institutions to syndicated finance should not be acceptable. For sukuk, we have more strict Sharia governance and Sharia compliance requirements. So that mainly serves the purpose. So a conventional institution may subscribe to sukuk, but it may not be allowed to directly participate in a Sharia compliant syndicated financing. However, if the conventional is already taking a lead and they are asking Islamic financial institutions to come in, that according to this new standard will be possible only if a Sharia compliant lead is identified to fulfill the requirements that apply on the lead. For example, the lead has to take care of the initial structure, it has to take care of the initial documentation, its Sharia board has to provide the initial provisional fatwa. So all these things cannot be done by the conventional institution in our view. Yes, it is also possible that a conventional institutions take the lead of a hybrid one and they make their Islamic window as the lead for the Sharia compliant part. This is acceptable. We have not written it as a specific condition, but this came to us as a question earlier. So we have done it. I think Sister Zahra, maybe this part that a conventional institution may take the lead and make its own window as the lead for the Sharia part. I think that we may need to provide some clarification somewhere, either in the body text or in the base of conclusion, because this question came to us in an earlier public hearing also. So I think I have answered the comments from these 3-4 participants. Let me take you forward. If there is anything related to this going forward again, we'll pick them up inshallah again. Brother Suleiman Muhammad Hussaini has a comment. Assalamu alaikum. Assalam. I think your definition of customer is not encompassing, as it was silent on corporate bodies, group of persons. Walaikum assalam. Thank you very much, brother. The term person actually includes juristic person and bodies of person, etc. But we'll take your comment. If the board agrees, we will improve the definition, inshallah. Brother Rehan Wahid has mentioned about paragraph 21B. Yeah, that part I already explained. I was just looking at there because there are different places where they are there. Thank you very much, Brother Rehan. The requirement that was mentioning is specifically in section 21 with regard to the syndicated to the hybrid syndicated financing. Paras Javed has another comment. Don't we have gharar in the source of fund that CFI would be bringing into the syndicated fund, syndicate or sukuk? First, we don't allow CFI to bring to the syndicate. They can bring to the conventional tranche, but they cannot bring to the Islamic tranche. The question is not gharar here. The question is here permissibility. For sukuk, we do not make a condition because sukuk itself it itself makes a securitization of the original of the underlying assets, etc. For sukuk, if you have the Islamic participants, it's preferred, but there is no harm in selling sukuk to anybody. Again, it's the issue is not gharar. Some of the scholars would say that if the person coming in is coming in with impermissible source of income, then you may avoid selling sukuk to them. I was just telling a quick solution that was discussed earlier, because for hybrid or the conventional one, we are very clear that because syndicated financing is a direct transaction, one-to-one transaction, we cannot combine halal and haram there. But in case of sukuk, the transaction as a whole becomes halal. Only the question is who is purchasing the sukuk. So from that perspective, that issue does not come there. We'll take your comment anyway. But I believe gharar is not the element here. The permissibility of the source, the permissibility of the funds used is an issue. And normally, for the purpose of permissibility of funds used, normally this is not a major issue for a conventional institution. I believe scholars normally have allowed conventional institutions to purchase sukuk. Your question is further explained. I think it's answered already. That your question is whether the need for the source of funds to be Sharia compliant necessary for an Islamic finance. For the transactions, yes, but for sukuk, there is a different situation because it's already securitized transaction. But for transactions, yes, we believe that the source of fund has to be Sharia compliant for most Islamic finance transactions. There are some exceptions, but we are not discussing the Sharia issues right now. What we have decided is very clear. Thank you very much. There is another comment from anonymous attendee. Can you please let us know why charging of fee is not covered? We have covered the sharing of fee, but not charging of fee. Charging of fee is a mutual agreement thing. We have not covered anything related to charging of fee, but we have talked about fair sharing of fee where applicable. So we have mentioned about that part because that is more related to governance. However, if you feel that there is an issue with regard to charging of fee, either a Sharia issue or a transparency issue or fairness issue, please kindly identify it very clearly because only charging of fee might not be an issue that we would be putting. But if you feel there are concerns with regard to charging of fee, either Sharia related concerns or transparency or fairness related concerns, please let us know. We understood that fairness and transparency related concern is sharing of fee, so we covered that part. Okay, so let's move ahead. So then we have transparency and disclosure requirements at the initial stage with regard to the customer, identifying the customer, financial state, financial position, operating conditions, underlying assets. There are a lot of transparency issues here because at times, one of the banks is already working with the customer. The bank is more aware about the customer's conditions. But since the arrangement of a syndicated financing additionally has a fee element, At times, we have seen some, unfair treatments and inappropriate disclosures. So, for example, if the client condition is not very good, but since my fee for arrangement is, which is normally material, and normally it is done by the different division of the bank, that is the investment banking division. So what actually happens that at times there is a conflict of interest situation where my fee is dependent, and eventually my personal bonus is dependent on the success of the transaction. So there is a huge possibility that the fairness will be jeopardized here. This is even the transparency may not be fully transparency requirements may not be fully compliant. So these are some of the major issues at that stage, and we have put these requirements that all the things should be mentioned on a transparent basis. The lead arranger shall procure from an SSB a provisional fatwa to approve the basic structure. We explained it, but what is the facilitation of this is that proposed syndication participants will gain confidence over the structure. Documentation team will help, will be able to will be able to do it on a quick basis. It will save their time and effort, and the respective SSBs will be having initial guidance, initial support to provide final approvals. Conflict of interest situations are there with regard to different already or existing or prior sort of relationships. So conflict of interest situation include an existing or a prior customer relationship of a potential arranger with a potential customer or its associated entities or persons, an existing financial or non-financial exposure of a potential arranger with a potential customer or its associated entities or persons, a fee arrangement between a potential arranger and the potential customer on terms and conditions different from the market norms. These are the things that actually create conflict of interest situations. The conflict of interest situation may result in jeopardizing the interest of either the potential customer or one or more of the potential syndication participants. In order to avoid such situation, the negotiation process for awarding the mandate shall be transparent. The potential arranger shall disclose any possible conflict of interest situation to the potential customer as well as other potential arrangers where a mandate is expected to include multiple arrangers, and the potential arranger shall not accept a mandate to be an arranger if it is probable that such mandate, if so awarded, will result in jeopardizing the interest of a party or parties of the syndicated financing transaction. Managing Sharia compliance in a hybrid syndicated finance. This is para 20 and 21. Sharia compliant syndicated financing transactions should preferably be participated only by AAOIFIs. However, a hybrid syndicated financing transaction may take place if the customer's financing needs. Now, these are the conditions. Okay, if the customer's financing needs cannot be met by AAOIFIs alone or by AAOIFIs willing to become syndication participants, and hence require the inclusion of CFIs. Or if the customer has no specific preference for Sharia compliant transaction, has already awarded the mandate to the CFI as arranger, and the customer and the arrangers are willing to include AAOIFIs as syndication participants by having a separate tranche of Sharia compliant financing to be approved by respective SSBs. In case of hybrid syndicated financing transaction, the sanctity of Sharia compliant tranche shall be maintained under all circumstances and at all times. It's not only about initial transaction, it's also about during the continuity requirements. The arranger for the Sharia compliant tranche shall be clearly identified and shall be only an AAOIFI. A mandate to such arranger shall be awarded specifically for arrangement and execution of Sharia compliant tranche in line with the Sharia principles and rules and the requirements of the standard. These are the minimum requirements that we have put in. I have already provided explanation, so I'll move ahead. Let me quickly see, there are a few comments, I think. Anonymous attendee, again, my apologies. There is a question of whether arrangement fee can be paid by the client. There are additional fee which can be paid by the client, such as structuring fee, etc. The question is whether arrangement fee can be paid or not is a Sharia issue, not a governance issue. We have seen that Sharia has allowed the arrangement fee for some of the situations and not allowed for some of the situations. However, as per my understanding of Sharia requirements, as per AAOIFI Sharia standards, since arrangement and requires additional services, so charging a fee in line with market norms is acceptable as per AAOIFI Sharia standards. But this applies on different type of transaction structures, because all transaction structures from that perspective are not the same. But charging a fee for financing alone has some questions, and Sharia standard at some places have not allowed those except for to the extent of the actual expenses. But arranging with others and facilitating the whole transaction, that is allowed if it is as per market norms. So this is something that is actually acceptable as per Sharia under a different agreement. However, this is not the discussion on the Sharia part, so we'll go. We'll just take note of your point, and we'll discuss with the working group and board if we need to discuss any further thing in that standard or provide an explanation with regard to that. Thank you very much. The point is very important, no doubt about it. But as I mentioned, it's more about the Sharia issues. Okay. Then there is a comment, should an AAOIFI participate in hybrid financing? So the answer, as I provided as per paragraph 20 and 21, that AAOIFI can provide financing only if the Sharia compliant tranche is identified separately, its Sharia principles and rules are followed, not only for the documentation, but also for the execution of the transaction. And the Sharia compliant tranche has a separate arranger, and all the Sharia board approvals and everything is done. These are the conditions as per this standard. We believe that getting into conventional without having all these requirements does not only have a Sharia non-compliance risk, but also has a reputation risk to the overall industry. Let me clarify this part, because we have emphasized on this significantly during our work on the standard, that the reputation risk of Islamic finance is huge for syndicated financing, because there are a lot of transactions where the syndicated financing was mainly led by conventional, and Islamic was only related to paperwork. There are a lot of examples of that people talked about during the working group and the board. So this is something that we all understand, that this is one of the weak areas of Islamic finance, and it also impacts the reputation of Islamic finance. People feel there is no difference between Islamic and conventional, and they say, okay, there was just a bench of document which was different, otherwise it was all the same transactions. From all those perspectives, we believe it's very important that we distinguish the two. So a quick answer is AAOIFI should not be going directly to a hybrid financing unless all the requirements of this standard are complied with. Okay, with regard to Ananto Varioto, your comment that about the mandate. So the point is that the mandate, we did not, we kept it as a separate requirement in not in the mandate, but as a separate requirement with regard to the responsibility that the customer should not be approaching other lead arrangers, etc. But we actually put it more like on the mutually on the arrangers. So this is not covered in the mandate. So the point of containing it in the mandate, I think this is an important point in addition to what we have already discussed in the standard. So let's consider putting it in the mandate also. We will take your comment to the working group. When we reach that point, I'll explain that to you, that how we covered it. But shall it also be included in the mandate? That is something that we'll discuss separately. Inshallah, we'll take it to the board. Inshallah. Thank you. So then we have requirements about the information memorandum, and we say that information memorandum should be in line with best practices and regulatory requirements and shared with all potential participants on a timely basis. Timely basis is also important because they should have enough time to review that. Information memorandum should include brief about the customer and all details about that, and about those charged with governance and management of the customer, etc. Detailed feasibility study and market analysis, detailed description of the financing transaction, pricing, underlying necessary financial information and underlying assets, etc. The phases of the syndicated financing transaction and total period of completion, the profit distribution and loss sharing mechanism, ratios as applicable, Details of the arrangement fee and other relevant service fee payable to the the arranger and other parties, details of security agent along with respective rights and obligations, potential risks and strategies and instruments to hedge them as applicable to the customer, the syndicated financing transactions and the syndicated financing underlying assets, credit and other relevant risk assessment by the lead arranger with regard to the customer and the underlying assets, names and brief profiles of the parties providing services like arrangers, guarantee assurance, the capital providers, security agent, etc. Details of the mechanism for final settlement and early settlement before intended maturity, details of recourse to Sharia compliant credit enhancement arrangement, including guarantees, undertakings in case of potential default, details of Sharia compliant options attached to syndicated financing transaction for conversion to equity of customer or repayment or both, or restrictions on the repayment as applicable legal framework and legal jurisdiction, as well as dispute resolution mechanism chosen by the parties, including arbitration in line with Sharia principles and rules. This is one thing that we emphasize normally, because in most of the jurisdictions, there is an issue that at times when you go to the courts of law, the Sharia principles and rules are ignored. So we normally recommend that all agreements and arrangements for Islamic finance should first include an arbitration in line with Sharia principles and rules before actually reverting to the courts of law. So actually, the issues should be resolved by arbitration under Sharia principles rather than going to courts. A summary of various scenarios that may be applicable to the syndicated financing transaction with regard to early settlement, restructuring, or rescheduling, as well as default, etc. So these are the things that we have suggested to be included in IM, Information Memorandum, and then we have the interfinancer agreement, and we have talked about things to be included in interfinancer agreement. Again, we do not seek to provide interfinancer agreement. We are thankful to IIFM for being part of this project. Their CEO was part of this the working group, and they have provided their input. And we are told that IIFM is planning to come up with a standard interfinancer agreement. So here, instead of defining an interfinancer agreement, we decided to put the common requirements of the interfinancer agreement. So we said that following are the minimum requirements of the interfinancer agreement, including details of syndicated transaction, the customer, syndicated finance underlying asset, detail of the respective rights and responsibilities of the parties and the participants, details of the lead arrangement, and other arrangers and their respective rights, responsibilities, limitations, detail of security agent and respective rights and responsibilities, significant details and processes with regard to security, holding the security title to the syndicated financing underlying assets and enforcement of rights on the same, summary of structure and the significant terms and conditions of syndicated financing transactions along with summary term sheet, conditions and process for pre-exit. Now, this is a very important point, that if pre-exit is allowed. So for example, I am a syndication participant or I am the arranger, and I got all of you into this and then I go out. So the question is, are we allowing pre-exits or not? If pre-exits are allowed, then it should be clearly allowed. If and the conditions and process for pre-exit should be identified. But if there is no pre-exit allowed, it should also be clearly mentioned that no pre-exit is allowed, because participants actually come to a syndicated financing transaction by having a confidence on each other. So one of them getting out may have issues. For example, one of them started feeling, okay, this customer is rating is going down. So now they decide, okay, let's get out of it before others. So this might not be fair with others. So if it is allowed, then what are the responsibilities and how it can be done? So terms and conditions to ensure equitable treatment of syndication participants and mutual responsibilities in this regard, rights and responsibilities of various parties in case of early settlement, as well as upon maturity of the syndicated financing transaction. In protocols of sharing information and communication among the syndication participants in line with the requirements of the standard, conditions and process for transfer of shares of the syndicated financing transaction between the syndication participants. So if they are not exiting, but they are mutually transferring to each other with mutual consent, then what would be the process? And dispute resolution mechanism applicable among the syndication participants. So these are the requirements that should be there in the interfinancer agreement to make sure that there is transparent and fair dealing between the with all the financiers, including the arranger, co-arrangers, as well as the participants. Interfinancer arrangement in case of a hybrid syndicated financing transaction. In case of a hybrid syndicated financing transaction, the interfinancer arrangement shall clearly identify and segregate the Sharia compliant tranche of the syndicated financing transaction along with the lead arranger with regard to such component of the syndicated financing transaction. Such lead arranger shall in turn be responsible to ensure compliance with the requirements of the standard. As I mentioned earlier, that the requirements related to hybrid are divided in different paragraphs. So that was paragraph 2021 and now 26, which are dealing about these requirements. In case of a hybrid syndicated, in such case, the interfinancer agreement shall ensure proper enforceability of Sharia principles and rules. This is a very important point, that if it is a conventional led transaction, where even if you identify Sharia compliant lead arranger separately, is still between the participants, the enforceability of Sharia principles and rules and the independent and equitable status of rights and position of Sharia compliant syndication participants is very important. And this is based on the market feedback in the working group, that there were some experiences of our consultant and some of the members who felt that these are significant issues, that at times Islamic financial institutions are, minor partners in the structure. So the enforcement of Sharia principles and rules and their independent and equitable status is jeopardized. It shall also specify the mechanism in line with Sharia principles and rules applicable in case of default for realization and liquidation of respective security and the underlying assets. Then we come to this very important point. I think this covers issue of one of earlier one also. Pricing for a syndicated financing transaction prior to and during the marketing and negotiation phase may entail a conflict of interest situation due to conflicting objectives and priorities of the arranger, the customer, and the potential participant. The customer's pricing preferences shall be documented and communicated to the arranger. The arranger shall provide the required guidance and necessary market information to the customer in this regard. The customer may have preferences with regard to potential significant syndication participants. The arranger shall pre-agree and document the customer's preferences before commencing the marketing and negotiation phase. In case the arranger, based on its expertise and market understanding, deems it necessary to deviate from the customer's preferences, it should communicate a deviation to the customer along with the rationale for the same. So the customer they want to go with the bigger banks, but the bigger banks are asking for a higher rate. I'm just giving you an example. So the preferences should also be documented, as well as if the preferences cannot be complied with, that should also be documented and communicated in an appropriate way along with the rationale. Then considerations during the transaction close. Okay, before I move to this considerations before the transaction close, let me take a few more questions. So there is comment from Brother Rehan Wahi 23K. The disclosure with regard to Sharia structuring agent advisor for the syndication transaction may also be provided. Rationale: at times in hybrid syndicated transaction, when the lead arrangement is a CFI and it has a Sharia compliant tranche as well, the Sharia structure is developed by an advisory firm and or IFI. I think this is a good point, that a Sharia structuring agent can be there. But Brother Rehan, the point is that if we put it this thing, to be honest, this might be a practice, but the problem is this may create a problem that a conventional institution can take the lead for the Islamic transaction because they are bigger in size and they are already at an advantageous position. And just by involving a Sharia structuring agent, they bypass all other requirements of this standard. We have put in a requirement because that Sharia structuring agent might not be having a full Sharia governance mechanism. So that is just like, just a shortcut to make a CFI eligible for Sharia compliance of the whole structure. Now, I can tell you that this thing will happen only at the documentation stage. It will never be on a continuing basis. While we have put all the requirements on a continuing basis, so we have said that the transaction compliance is not only in the documentation phase, it has to go through the whole process. So from my perspective, to be honest, I personally don't agree that conventional institutions should be allowed to lead by having only an agent or an advisor to be appointed for that purpose. This is my view. I'm not saying that we will not take your comment to the working group or board. All important comments we always take to the board, but this is my view that this might be a shortcut and this will put Islamic financial institutions at a disadvantage. Again, we take your comment to the working group. I have provided you my personal view, but it's not necessary. The working group and the board will decide if they want to allow the structuring agent thing or not. Thank you very much. It's a very important comment, very good comment based on market practices. I'm just afraid that I have my own apprehensions that there is a risk. Brother Rehan has another comment. In 26, it should be read as the Sharia compliant tranche of the hybrid syndicated transaction. Thank you very much. I think we should take note of it. Thank you, Sister Zahra. Please take a note of it. We'll take it to working group. I think it needs to be corrected. Thank you very much, Brother Rehan. Again, there is okay. There are one or two comments only. Okay, they are just comments to agreeing to explanation, etc. So it's okay. Now we have Shafiq Izwan Ramlan. Assalamu alaikum. Would there be a section that allow participating banks to onward sell or transfer to new AAOIFI either by Baudain, Basila or Hawala, etc.? This is similar clause in APMLA loan template. Very good point. Very good point. I'm not actually, we said that if they sell or transfer, then they should write down the conditions in the financier agreement. So I think what we have written might serve your purpose, but we'll take a note of it. And if it does not serve the purpose completely, then we can consider improving the wording in line with your comments. Thank you very much. Now, on the transparency side, the lead arranger shall consult and keep the customer informed about all major developments in respect of the mandated syndicated financing transaction until the transaction close. The lead arranger shall disclose about allocation of financing and basis of allocation and details on basis of underwriting, etc. The lead arranger should also update the customer about the agreed terms of syndicated financing transaction and legal and contractual obligations and requirements of Sharia principles and rules. Brother Sadaqat, I think your comment comes here in para 32. You said that we have already mentioned that they should be apprise the customer of the relevant requirements, but putting a checklist or detailed guidance may be added here. This can be done in form of a checklist or detailed guidance. So this is important. So we had covered this thing, but I think your comment can add value here in para 32. Sister Zahra, please make a note of it. Brother Sadaqat's comment about having a checklist or detailed guidance to the customer to comply with Sharia principles and rules. Okay, we can. It is already covered, but we can suggest we can put a footnote or we can put an explanation that this can be done through a checklist or detailed guidance, etc. Process flow guidance, etc. The arranger and other syndicated participants shall disclose any prior or existing business relationship and relevant experience with the customer. This is very important because the information related to the prior relationships is important to assess the customer's capability of fulfilling the payment, like having the payment capacity and fulfilling the requirements, etc. So this is very important that any of the arranger, etc., having access to the customer information which may impact each other's decisions. Again, they need to keep the confidentiality, but at the same time, without impacting the confidentiality, they should be addressing the issues related to the customer's performance capability, etc. Payment and performance capability. About conflict of interest, that obtaining an additional financing or service business either directly or by a different department arm or an associated entity person is not leveraged on the mandated syndicated financing transaction. This is very important that, okay, I'll get you this syndicated financing, but give me cash management business or give me LC business or give me some other business. This is unfair. So this should not be leveraged on that, specifically that jeopardizes the interest of other syndication participants. Arranger shall ensure the associated appointments related to syndicated financing like security agent, takaful are also on an arm's length basis. We allowed that the arranger may also be the security agent with due consent of all relevant stakeholders. Arranger may be more influenced to close a syndicated financing transaction due to fee income potential for acting in such capacity as compared to other syndication participants. Accordingly, the arranger at all times will maintain a high level of professional and ethical conduct and desired level of transparency. It shall also facilitate equitable treatment to all syndication partners. Equitable treatment does not mean here that you share the fee with them. The point is that you need to be equitable in the overall terms and you need to be fair with them, because your priority is to complete the transaction so that you get the money. But others may not be getting that additional money in form of fee, so they might not be that much desirous to conclude the deal. So actually, the issue of transparency and fairness is very important. A potential syndication participant who, after being approached by the arranger, now this is the comment from who made that comment about this part. What we are writing, we did not put it about one of the participants had made a comment for putting this in the mandate. We have put it here. A potential syndication participant who, after being approached by the arranger through a generally established means of communication, decide not to take part in the syndication, shall not approach the customer directly to offer a counter proposal or standalone deal, and divulge in any manner whatsoever any material non-public information received about the customer or the syndicated financing transaction. So A is about that risk that, okay, you are doing this transaction, okay, we are big enough, we'll do the transaction alone, and so you save the arrangement fee and etc. This is unfair treatment, because you were approached under a specific arrangement, so you need to either go with that proposal, or otherwise you should not be doing a backdoor approach. Part F, consideration during continuity of the transaction. Transparency, again, the customer shall provide regular progress and performance updates and periodic financial statements, etc. Then all syndication participants, in accordance with pre-agreed information sharing protocol, shall keep each other updated on any material information that comes to their knowledge with regard to the customer or the syndicated financing underlying asset. This shall include any significant changes in the respective syndication participants' exposure with the customer. So I am part of the syndicate, but I have significantly reduced my other exposure, or I have significantly increased other exposure with the customer. These are the things that should be updated to each other in line with the agreed protocol. So you need to have in the interfinancer agreement, you need to agree the protocol and the type of information that should be shared. But we believe that a significant change in exposure by one participant actually impacts others as well, so it should be in the knowledge of others. Respective responsibilities of Sharia compliance and governance. Now, each syndication participant shall ensure compliance with Sharia principles and rules and shall conform to the requirements of applicable AAOIFI governance standards insofar as their respective proportionate share in the syndicated financing transaction is concerned. So it means that internal audit, Sharia compliance function, all the functions will be applicable on these transactions as per normal practice. This will inter alia include the functions and responsibilities of SSB, Sharia compliance, internal Sharia audit, and external Sharia audit. Mutual sharing of issues, observations, and knowledge. Again, it's part of Sharia compliance. In case where one of the syndication participants identify an issue or observation with regard to the compliance with Sharia principles and rules of a syndicated financing transaction, they shall immediately inform others. So because the problem is, for example, there are 5 participants. One of the participants identified a Sharia compliance issue in the transaction. Now, the problem is that Sharia compliance issue that is identified by one participant might be applicable on all, because the transaction is a syndication transaction. So in those situations, it is very important that in accordance with the agreement that they already have signed as interfinancer agreement, they need to share the information with each other, and it's a very important and very crucial information. Change of fatwa. Now, there is another very important issue that as per AAOIFI standard number 29, Sharia standard number 29, there are some fatwa related requirements when a fatwa is changed. Similarly, AAOIFI is finalizing currently its exposure draft of Sharia decision making. That also considers the issues related to change in fatwa. So we actually believe that this is very important, that if a fatwa is changed with regard to any of the transactions by one of the participants, it needs to be communicated to others as well. Then we have part G, considerations on change in syndicated financing transaction before intended maturity. So the early settlement there can be different approaches. One is early settlement. Then there is rescheduling and rescheduling or rollovers, etc. So early settlement of a syndicated transaction may take place after regulatory clearance and approval of the respective SSB when the parties to the syndicated finance transaction mutually agree to an early settlement of the syndicated financing transaction, or the customer exercises its unilateral option of an early settlement of syndicated financing transaction in line with the contractual provisions, or the syndication participants collectively exercise their option of unilateral termination of one or more of the underlying contracts in line with the contractual provisions, including the option due to default or potential default of the customer on the principal terms of syndicated financing transactions, or the regulator orders an early settlement for any reason that it deems fit. So these are the situation where they agree to mutual either under the contractual terms or as per regulatory requirement or as per mutual agreement, they actually decide to early settle. When it is early settle, then the respective Sharia boards have to approve the modus operandi of the earlier settlement. Early settlement shall be made after due deliberation and communication with the syndication participants and the customer, and necessary approval should be taken. The termination shall ensure fair treatment for the parties. That is very important, that it should be fair treatment. Pre-exit via syndication participant. This is applicable on one of the syndication participants who wants pre-exit. There were actually two comments that we received earlier with regard to these things. So we say that syndication participant may pre-exit from syndication financing transaction before its maturity as per terms and conditions of the interfinancer agreement, duly complying with the contractual terms of syndication financing transaction and the relevant Sharia principles and rules. But if it is not allowed by the interfinancer agreement, then he cannot have a pre-exit. The syndication participants, including participants intending a pre-exit, shall at a minimum ensure compliance with the interfinancer agreement. In complying with such requirements of the interfinancer agreement, the syndication participant shall, number one, inform the customer and obtain its prior approval if so required by the syndication participants. Syndicated financing transaction requirements in the financial agreement for clearance of pre-exit. I think this is a typo error, Sister Zahra. I think this is because of footnote, maybe pre-exit and replacement with or page number, because of page number or because of footnote. A typo error is there, it should be corrected. And replacement with a, you just need to check, Sister Zahra, if it is in the PDF also or only in the presentation. Yeah. So, interfinancer agreement or for clearance of pre-exit and replacement with an existing syndication participant or a new incoming syndication participant, and inform other syndication participants through the lead arranger and or security agent of such decision along with the rationale. Seeks a no objection certificate from other syndication participants if so required by interfinancer agreement in a manner so specified therein, and sign a non-disclosure agreement with the customer and other existing or incoming syndication participants if so required by the interfinancer agreement in a manner specified therein. So we don't make this NOC and NDA mandatory. If it is required by interfinancer agreement, then it should be mandatory, but our preference is that should be NOC and NDA. Restructuring or rescheduling of a syndicated financing transaction may generally occur in the following scenarios. Now, this is the part two. So first was pre-exit. The second is restructuring or rescheduling. Restructuring or rescheduling shall be as per mutually agreed, in the following scenarios as a result of customer's default or risk of potential default, or a result of acquisition, merger, or corporate restructuring of the customer. Any restructuring or rescheduling of a syndicated financing transaction shall ensure that it's being undertaken while maintaining the primary objective of original transaction, the initial equilibrium of financial benefits or rights, and safeguarding the interest of the related parties. Any restructuring or rescheduling proposition shall be thoroughly reviewed and approved by respective SSBs of the participants, the customer, if any, and where applicable, the regulator, to ensure their compliance and safeguard the interest of the parties to the syndicated financing transactions. I think we have now some comments. Let me read those comments. Okay, there is comment from Arinto Varioto. When the arranger has done his all early works before financial closing, then a force majeure is occurred, which caused all participant banks quit and syndicated financing is not meet customers' need. Is it allowable for the arranger still to charge the customer for the said early work he has done, like fee? Brother Arinto, this will be, I would say, this will be for sure as per the contractual arrangement. So the contractual arrangement needs to be seen here. It is not a governance issue. It is a issue of contractual arrangement, and we believe that the current contractual arrangement is as per Sharia requirements. So in my understanding, generally the contractual arrangement says that in case of a successful financial close, it will apply. So to be honest, for me, it is like, the fee will be only charged in case of success or completion. However, in my past experience, I have worked in a manner, and I have seen some of the investment banks working in a manner that they charge a minor amount of fee against the services like preparation of information memorandum and preparation of or review of feasibility study and the plan and the market analysis, etc. So it depends on the contractual arrangement that if there is a fixed fee plus a variable fee, or it's only variable fee. If it's a fixed fee plus variable fee, then I believe that fixed fee will be payable either way if the work is already done. But the variable fee is normally in form of incentive on completion of the financial close. So I think it will not be paid. According to some schools of thought, a minimum fee is still needed in type of this work. Most Hanafi fuqaha would normally say that a minimum fee is necessary. The variable fee shall be in addition to the fixed fee, even if fixed fee is minimum. So you will find that some of the scholars in some countries will be actually making it a requirement that at least some part of the fee is fixed. I personally believe that a combination of fixed plus variable fee should always be there. That is my personal view. But the answer in a nutshell to your question is that it is subject to contractual arrangements. We believe contractual arrangements are as per Sharia, and this is actually not a subject of this governance standard. This is subject of relevant Sharia standards. Thank you very much for a very important comment. From Brother Sadaqat Khan again, in which type of syndicated financing projects AAOIFI must not participate or take the lead, or the nature of project restricted by Sharia? That is, I suggest to specify such projects clearly in this standard to avoid any confusion or misinterpretation of the standard if appropriate. Brother Sadaqat, we said that any hybrid, we should not take the lead. In hybrid, we should take the lead only for the Sharia compliant part. But if you want to give some examples here, we will be more than happy to have additional examples in your comment so that we can consider for the board. We'll take it to the board if it can be done. Then there is comment from Brother Muhammad Yusuf Salim. If it is Brother Yusuf Salim from Dab, Walaikum Assalam, brother. I think name seems to be like, the name seems to be familiar. Anyway, brother, welcome, Brother Yusuf Salim. What would be the type of contractual relationship among syndication participants and between the participants and the arranger? Actually, the inter-financer agreement is the one that takes care of the agreement between the participants and the arranger. So inter-financer agreement includes all arrangers and all participants, while the mandate includes only arrangers if one single arranger or multiple arrangers, but mandate includes arranger and the arranger or multiple arrangers and the customer, while the inter-financer agreement includes arranger or all arrangers and all participants. So these, but inter-financer arrangement will not be having the customer. Brother Sadaqat, I'm not removing your question from my list. If you can kindly provide the examples that are coming to your mind so that we can well understand from what angle you are seeing it. Thank you very much again. So now we move to the next section, that is considerations at maturity of the syndicated financing transaction. So we have put the requirements with regard to the maturity also, that whatever is at the whatever are the Sharia products, different products have different maturity requirements. Like for Murabaha, it will be only a payment, but for Ijara, it will not only be payment, rather it will be also a sale and gift transaction, etc. Similarly, in case of a Mudarba or a Wakala bil Istismar, it needs final profit and loss computation and final distribution of profits and payment of payment of wakala fee and mudarib share, etc. So whatever requirements are there with regard to the maturity, those are there. Secondly, obviously, in case of mudarba, wakala, in case of some other type of transaction structure, there might, in case of ijara, in case of diminishing musharaka, there might be some transfers of assets, there might be some gift and hiba required, like, waiver of fee may be required. There are different arrangements under which different, if there are some reserves kept in a mudarba or a musharaka venture, those are to be like, those are to be settled. So there are different requirements which are as per the respective Sharia requirements of the respective product. So from that perspective, we believe that even at the final settlement stage, final maturity stage, the responsibilities of the Sharia board of the respective institutions are still there. So the Sharia boards have and it has to be done obviously in line with the Sharia principles and rules and the relevant contracts of the products. So these are the requirements that need to be done at the towards the end. With that, we come to the conclusion of the standard. I'm not going to take you through the appendices and the basis of conclusion. If anybody has a comment, they can provide, but we are not going to take you through. But the suggested date of application of this standard, because as Sister Zahra mentioned in the beginning, that next week we'll be holding a public hearing in Arabic. And after that, we believe we'll be trying to take this standard final towards finalization. We will be like, we expect that this standard may be final, may get final within this year, or our plan is within this year, because at the end of November we are holding a meeting of the governance board, and we may try to finalize this standard within that one if all the process is done before that. This is our effort. However, at max, it will be done in the beginning of 2023. We would love to have your comments on the effective date also. If you believe that more time needs to be provided with regard to the application date, please let us know. We'll take the comment to the board. We have taken most of the comments right now. We will request, like I can see two more comments, but let me just request again that all of you are requested to provide your comments in writing as well. Try to read the standard. It's available on the website. I requested our colleagues already to provide a link in the chat window, and then you can actually access the standard again, have a look at it, provide our additional written, provide us with your valuable written comments again. Thank you very much on that. Let me take the remaining questions. Brother Sadaqat, you have not clarified those examples, so this is there. Brother Yusuf Salim, you are most welcome. Then we have MFU Mubarak Farazi. In this standard, a clear guidance should be included about hybrid financing, and it may be a prohibition thereof. Moreover, in case of syndicated financing by AAOIFI and CFI, there AAOIFI must be leader for ensuring Sharia compliance. Brother Farazi, actually, I tried to explain this thing. Number one, we cannot ask AAOIFI to be a leader of hybrid, because it means that AAOIFI will be leading the conventional transaction also, which is haram. So we say that in hybrid, AAOIFI and AAOIFI should lead the Sharia compliant tranche only. We are not asking them to become the leader of the syndicated hybrid finance. That will be prohibited. So that is, I think, not allowed even by our Sharia standard already. So this is something that we are not going to allow. I think we have covered in paragraph 20, 21, and 26, and one more place, and in the definitions about hybrid financing and the distinction, and that that the Islamic financial institution may not directly go to a hybrid one. I think we have covered all these things, but since this standard is a process flow-based standard, so these requirements are put at different places. So from that perspective, if you find any specific guidance that is missing after considering requirements of paragraph 20, 21, and 26, and any other requirements that we have put in different places of the standard, if you still believe that there are additional aspects that need to be considered, please provide us with specific items that need to be inserted. And that is the same my request to Brother Sadaqat Khan, that if you want to put some prohibitions in the standard, please identify exactly in bullet points what you want us to insert, so that we can take your comment to the board and the working group, because we can't take a general comment like this. with that, I think we have covered all the questions, but we are open to take questions for next 2-3 minutes again. I think there is still, we have 12-13 minutes of the time, but there is no harm in concluding earlier. So I'm still open to take questions if we get any questions now, or otherwise then we can conclude today's session, inshallah. So if there are any other questions, please feel free. Okay, then there is no other question. So again, I request to provide comments in writing. There is a comment again, I think we just received. Brother Farazi said that leadership on the Sharia compliant syndicated financing. Exactly, brother. This is included in the standard, brother. This is exactly what we have included in the standard. You need to see the relevant paragraphs of 20, 21, 26, and some other areas where we have mentioned this thing, and also all the definitions, etc. Thank you very much for your important comment. The comment is very important, but we believe we have included it. If you want to further expand on that, please provide exactly comment with the paragraph reference where we should insert something. Thank you again, Brother Farazi. Okay, with that, I would conclude my presentation, and I think before we conclude, I should request Sister Zahra, you need to say something before we conclude.
Brother, we have 2 raised hands. Do we have a couple of minutes?
Sure, if we have, yeah, no problem. If we have raised hands, because we have time till 11:30 is the dedicated time. So if we have time, so we can. So there is again Brother Sadaqat. I think this Galaxy S8 is Brother Sadaqat. So Brother Sadaqat, please, if you can. So sister, if you can allow Brother Sadaqat first.
Yes, you are allowed to talk.
Assalamu alaikum, everyone, and Brother Umar. Thank you
very
very much for allowing me to speak. Very shortly, I will speak. First of all, thanks to entire AAOIFI members of the board, working group, and executive team, and we highly appreciate their efforts in developing this standard and also arranging the public hearing sessions. Being a senior Sharia professional in the Islamic banking industry, I am fully confident that the correct implementation of this standard would certainly improve the level of compliance with Sharia principles and rules and good governance practices. Besides, it shall also enhance the stakeholders' confidence in AAOIFIs and safeguard their interest by ensuring the transparency and impartial treatment. May Allah subhanahu wa ta'ala grant the best rewards to all of you. Ajri Azim. Thank you very much.
Ameen. Thank you very much, sir. Thank you again for your, your support. Every time you join in, you provide your very valuable comments. Thank you very much, sir. Your appreciation, it means a lot for us. We have comments from Brother Ahmed Dayan. He can also join in. Before that, we just received 2 comments from Brother Abdurrahman Safi, who will regulate the syndicated finance, banking, or security market. First thing, by default, it will be banking supervisor. That is normally the central bank or the banking supervision authority by default. However, there can be some syndicated financing transactions which are done by or which are participated by investment banks or investment finance companies which are under the ambit of Securities Commission or Capital Market Authority. This happens in some of the countries, that there are NBFCs, non-banking finance companies, or non-banking finance institutions, or in some countries even the investment finance companies. There are no investment banks and there are investment finance companies. So at times these investment finance companies or non-banking finance companies are in the ambit of either the Capital Market Authority or Securities Commission, whatever the name in the respective jurisdiction is, and we have seen examples. So it is quite possible that they can be even the leader. At times they are even the leader or the arranger of the transaction, and at times they are participant of the transaction. We have seen those transactions. So actually, from syndicated finance perspective, it is not that one single regulator will take care of it. Rather, each of the regulator will take care of it for their respective market. So the banking market for sure will be there. So the central bank or the banking regulatory authority will take care of it. But with regard to non-banking finance companies, with regard to investment finance companies and other type of non-banking financial institutions which are in line, which are like, you know, in Pakistan, there is a specific example of Mudarba sector. They are also at times, like, you know, in these transactions. So from that perspective, any institution will be subject to their own respective regulator. It will not be that this is regulated. It is unlike sukuk, because for sukuk it is a security by itself, so it goes to primarily to the sukuk market. On the sukuk market, the security market regulator, capital market regulator actually takes care of it. So this depends on the respective regulators of the institutions who are actually participating in these transactions. Thank you very much. Okay, so Brother Ahmed Dain, please. My apologies if I'm not pronouncing your name correctly. You can mention your name as well, brother. My apologies for that. So you are allowed to speak now.
Yes, I think there is something wrong because Brother Ahmed is not attending the. Okay, no, he's not attending.
It is mute. He's joined, but he's connected, but it is mute.
Okay.
Maybe he's away from office.
Okay, maybe either there is some technical glitch or maybe he is away for now. Maybe he raised his hand earlier and he's away for now. So I think we can conclude our session for now.
Thank you everyone for your attendance, and we're looking for your participation in the upcoming events. Inshallah, you are welcome to send your comments to governance@iofi.com no later than 31st of October. And once again, thank you very much. Thank you.
Thank you, everybody. Assalamu alaikum wa rahmatullahi wa barakatuh.